All right, guys, let's do it. Let's get down to help you make some money. The first stock suggestion is Alcoa. That's right. All of a sudden, Alcoa has become this magnificent company, well-positioned for global growth, ready to take advantage of all the hot industries. Now, the last earnings report, kicked this whole thing off. Revenues were up 7%. Global rolled aluminum was up 34%. Their upstream business improved for the 11th straight quarter. Earnings came in 50% above the street's consensus, and now for fiscal year 15, the consensus continues to get ratcheted up almost every single week. Guidance really is the key. The aerospace industry, they say for the rest of the year, will be up 9%, packaging 3%, building and construction 6%. And to further take advantage of the insatiable global demand for commercial aircraft and regional jets, they have bought a company called Firth Rexon. It's a jet engineering component maker. Management is really smart. They're also building out their jet blade business as well. Now, here's the thing. I'm looking for a move to $17.70. That's going to be your big test for this stock on the upside. North of that, I see the stock rally into the mid-20s. Back with us is our friend, great friend of the show, James Frischling. He's here because, well, he's co-founder and president of NewOak Capital, but he's here because he agreed with me last time. And so let's see if you'll be back again.
That's what it takes.
Alcoa, Jim.
I might make it back then. They're hitting on all three segments of their business, as you highlighted. Aerospace, autos, and the commodity market is providing a good tailwind for them. I really like what they did to diversify. And you mentioned they're not the same stodgy old company they used to be, and I agree. They did a $1 billion deal with United Technologies, Pratt & Whitney, to supply them with pieces for their engines, engine fans. It's a great play. I think it'll help them in the aerospace. I also find that as they contribute to the engines, companies like Airbus and Boeing, they don't want to bring new planes to market. They want to renovate and fix up the old planes. And again, Alcoa is going to benefit from being a good supplier for them.
I don't know if you've ever been involved in this one, Matt. It's been a heartbreaker for a long, long time. So I guess anyone who might have been involved in this stock in the last 10 years or so saying, being somewhat skeptical.
You look at the chart, it looks like a tech stock. I mean, this chart has gone straight up. It looks fantastic. What I like is they shut down some of the plants that weren't making money. They kept the low-cost plants open. The PEG ratio is below 0.6, which is a great valuation. But the chart concerns me. It's so good, it concerns me. I mean, it's got to pull back at some point, so I'm not quite sure I'm chasing it here after the earnings
I think it's amazing what they've done for themselves, though, because it went from Alcoa no longer really is the telltale of earnings season to here we are talking about Alcoa like it's the beam
I used to write it off.
Storm.
Like Alcoa kicks off the earnings season. Who cares?
Right,
But now it's a little bit
But it's a commodity play. Does it concern you? It's a commodity play. Does that concern you?
Well, that not as much as it used to.
Okay.
I mean, I used to think Alcoa, aluminum foil hats, maybe something,
Right.
But it's a robust company that's in a space where lighter metals is what's in. Lighter metals, so you can take these airplanes and take them further on less fuel and all that kind of stuff. Same thing with cars and these auto emission things.
And autos. I mean, they're providing a ton of aluminum to Ford for their aluminum-bodied cars, and now they're in the with the Ford 150 truck. So they're doing stuff in autos too.
We got to go. It looks like you want to. Do you like it? Yes or no?
I do, but the fundamentals also good cash flow from operations. That's stuff I look at.
Never forget about that with a big company like this. All right, Jim, thanks a lot. We're going to bring you back, though, because I want your thoughts on another investment idea coming up a little bit later in the show. In fact, my second investment idea is coming up. It's a British semiconductor company, and it's trailing the industry right now. Believe it or not, this was the leader for a while. I think it's going to catch back up, and if it does, I'm going to make you some money. My favorite part of the show, time to help you make some money. Today's stock suggestion is ARM Holdings. Now, it's a major player in network infrastructure, licensing its technology to an array of partners that includes just about every household name in tech. Its business model is based on the idea of savings and intellectual property that it develops, and then it supplies to those very same partners. As we race toward this next evolution in technology, it's going to require users' experiences to have to be fantastic, ubiquitous, access to the cloud, enormous flexibility, and that's what this company does. It's designed to write chips that help these networks cover cellular, the office, home industry, and of course, don't forget the Internet of Things. Now, the thing you need is scalability, performance density, and you must be flexible. This company has been great at all of this because ultimately what we're talking about is a movement to what they call the super intelligent cloud. That's going to rule the roost in the next 5 years. I think this stock chart is not pretty, I will admit that much, because, well, listen, it's going to probably be higher than average risk because it hasn't done so well recently. Otherwise, though, I think it's on the verge of making a reversal and breaking out. Now, they have a long record of beating the street, but results have slowed somewhat year over year, and that's given investors pause. But the result is a cheaper stock. I like that. I'm looking for an initial move to 47. Longer term, I think this could be a $55 stock. Now, I wouldn't make it a firm stop loss, but I would reevaluate the stock if it were to drift lower after buying it to around $40. Jim Frischling is back with us. What do you think about this company?
You know, I think you've disclaimed it well, because I was a little nervous about how much this company has underperformed the sector. But a couple things that actually make me like it, and here are some things. First of all, cell phones, smartphones, getting cheaper all the time. They are the de facto player in smartphones. And as the prices fall below $50, you're going to have an untapped group of consumers throughout the emerging markets, India, Africa. They're going to become buyers, and they are the dominant player. Another thing, and just very recently at the supercomputer conference, and not that I attended it, but what I understand.
What about Comic-Con?
I did.
You read comic books? I hate to digress, but you have to break the tie.
I don't read comic books.
All right, go ahead.
I'm off the show. That's it.
The conference.
They said that actually the winner of the processors is not going to be about architecture. It's going to be about the developers. What developers are using, and the developers are on ARM's products. So again, I think there's some things that are going to push this thing higher. So I like the way you described it.
And I want to let the audience know what I'm kind of doing is I'm not grasping at straws, but I'm trying to give you balance, because each night it's going to be difficult for me not to give you a stock that's not already at a 52-week high. So some of these names, Matt, that aren't there yet have a little bit more risk. Inherently, if you're not at an all-time high, something's got to be wrong.
Yeah, and as Jim mentioned, the semiconductor industry has been fantastic. We had Intel up 9% today, hitting an 11-year high. But when you look at the smartphone, if you want to just focus on that area of the business, the smartphone business is 25 times the size of Intel's. That blows my mind. So I can look at that as being positive, because it's in almost every smartphone out there if that continues. But if Intel decides that we want to get in that business, or another company that's getting in that business, then ARM's in trouble.
So funny you mention that, because even when ARM was the hottest stock out there was always the Intel rumor, and you feel like Intel's eating the lunch otherwise.
Right. Well, I mean, the market cap here on this company is about $20 billion, but that's my question. You know, yes, we're talking about also the risk here involved. The beta's around 1, so I mean, it's not such a high, huge risk, but at the same time,
it's been sideways for a year.
Yeah, it's not volatile. All right. Well, thanks a lot. Hey, again, my thanks to Jim Frischling from NewOak Capital. Next time, I'm going to have a copy of Thor for him. All right. You know what? I want everybody to build their wealth and be successful. And a lot of times that begins if you plant a seed when people are at a young age. You've got to work hard for the money, but when it comes to interns, who actually benefits? The panel's all fired up about this one. We talked about it all day. Can't wait to include you guys in a conversation. We'll be right back.